Okay, back with closing trades right here in ET now. And yeah, the struggle really for the markets continues ahead of the day's break tomorrow. You've still got the Nifty, which is lower by about 59 odd points. A little bit of an attempt. We were down about 100 points just a short while back, but let's see where this actually ends. Well, of course, metals as the trade is turning out well. You've got a Tata Steel, which is holding a solid 4% in the green, no less. Look at some of the other commodity plays. Look at an ongc and the kind of strength that stock has actually showcased for the last two trading sessions. Today also higher by 2%. There's, of course, BEL, which has really been a leadership name in that sense. And Coal India also, for the last two trading sessions, today also holding higher by about almost 1% as we speak. But let me welcome on board Anand Tandon, too, independent analyst. Anand, hi, afternoon. What's the takeaway so far from the IT earnings, Anand? Seems like they've got impacted, A, because of the international business not picking up as much, and the labor code adjustment as well on their balance sheets.
Right. The labor code adjustment, of course, perhaps could be argued that, it's an adjustment which will not impact too much going forward unless they are not able to pass on the incremental increase. However, on the demand side, it remains very clumsy even today. There is no great improvement in outlook. Something which I had mentioned 6 months back, because at that time companies had said second half will be better. And as always, that just means you're kicking the ball down the road. There is no second half which is better, and it is unlikely that the first half of the next year will be better as well. So I think the situation for the IT continues to remain bleak. And from that, in that context, if domestic hiring continues to remain bleak, despite the increase in hiring from the dedicated centers of global majors, you would find that impact moving into the domestic demand situation for consumer durables and the like.
Right. Anand, pockets of opportunity. Would you call this market as a market which is presenting opportunities? That's point number one. And what would those pockets be?
Well, it is still somewhat overpriced. Most of the change, the market really hasn't fallen too much at the top line level. If you look at the index, it's still pretty much right up there, and the valuations haven't corrected much either. It is in the broader market that you are seeing some of the pain, but you have to keep in mind that also the broader market has seen a fantastic rally in the year preceding. So, it is just perhaps to some extent correcting for that. Even today, with very slow or fragile growth that we are witnessing in the economy, the markets continue to trend about 22 times or 20 times, depending on what earnings you're looking at. And therefore, it is not as if, despite the sideways movement, it has become very cheap. Now, that said, obviously, you have to keep looking at rotational movements. And I would argue that perhaps the place that one should be looking at now is a sector which has not done anything great over the last few years, which has been largely the capital goods kind of side, not necessarily only power, but industrials and so on.
Okay. Let me come to you, Akshay. With regard to Tata Steel, the moonlock in process, and we can see that on the stock chart as well. You believe there's still more value to go, and if so, how much?
Don't want to speculate on how far the prices, etc., can go. But the reality is that so long as the metal prices continue to remain firm, Vedanta is obviously a beneficiary of that. How much of that translates into earnings is a different story, and how much of it the shareholders will get is part of the corporate governance of Vedanta. But overall, I think, as everybody has commented, metals is in a sweet spot. You are actually getting fairly sharp price movements there, and that will obviously translate into earnings at least for the near future.
Okay. On charts, Kunal, all is something that you'd play, because we've seen a pullback, sharp pullback from the highs that the realty index saw. An opportunity, you reckon?
I think I've always preferred to play real estate through the housing finance companies. So if you are somewhat bullish on that area, which in fact I am not, but if you really want to look at it, then I think the housing finance continues to remain a more attractive way of playing.
Anand, also curious to know, where is it that you stand on the entire PSB debate? While the risk reward was definitely in favor of them till about last year, now that earnings for some of these smaller ones have actually come out, Do you still have conviction? And if you did at all?
Well, banking is obviously a sector which is still somewhat positive. One is positive on, and the PSU banks still last year were quite cheap, but most of them have now reverted in terms of valuations to back where they were on an average for many years. I think for some more time you may probably find that given the fact that their balance sheets are quite clean, they will be in a position to roll out or maintain perhaps a slightly higher rate of credit growth, which is something that many of the smaller, private sector banks and perhaps the NBFCs will struggle with, given the fact that we are not very, we are not looking at very high deposit rates going forward. So in that kind of situation, I think PSU banks will continue to do reasonably well. The one caveat I have is that given the possibility of all these mergers coming through, you will have that the management being distracted, and therefore to that extent, performance may somewhat suffer. But among the kind of lack of opportunities that I see in the market right now, I think PSU banks still offer some upside.
Well, PSU banks offer an upside, according to Anand. That's the first I've heard of Anand sounding bullish on something. So you want to listen in on what he's saying. See, Life is able to hold on to those margins. Well, at least evidently so, it doesn't seem like. Anand, what's your take with regard to life insurance? The growth has been sharp, but can the margin knock be offset by the kind of growth that some of these companies are showing, or will that be too tough?
Don't worry too much about the numbers. This is one of the rare places where there is a long runway still. You are looking at a large number of policies sold in India, but even now, most of the life insurance policies continue to be based on ULIPs and not so much on protection. More importantly, the sizes are still quite small. So I think, you can pretty much take a portfolio of the top 3 insurance companies and hold on to them. And I think you will see a significant appreciation over the next 5-10 years.
We're just looking at MRPL's margins as well. It's a solid 11% that they've clocked in, and that's a significantly higher number than what they clocked in the previous quarter. And, it's really an across-the-board beat, which is why you're seeing that kind of a jump up come in on the stock price. Having said that, Anand, just wanted to understand what is it that we could hear from the budget that perhaps could cheer up the markets, if at all?
Well, the only thing that will clear up the market right now is a cut in capital gains tax, but I don't think that's happening. In fact, if at all, I wouldn't be surprised if you find that the government does something to increase the tax rate somewhere. At the end of the day, they are having trouble in increasing the revenue that is coming through after the waivers that have been announced in the GST and the cut in taxes that happened last year. So I don't expect any positive from there. Frankly, the budget from a tax perspective is not going to be able to offer much. The government has already increased the tax on the usual suspects like tobacco and so on. So I think there is not that much arsenal left to be able to tweak around. The rest of it will be signaling.
Okay, not much arsenal left. Anand, how should one look at MRPL's numbers? Because it seems like refining margins have been very strong this time around. As a result, based on your opinion, which would be the other companies which could likely declare such strong numbers? Because the kind of move that we've seen on the stock price as a result of those numbers, which are indeed very strong, is one way. So I'm trying to get a sense as to what was the street penciling in versus we're getting something robustly stronger, right? Who are the other beneficiaries likely to be?
Well, obviously, if refining margins have been strong, almost all the refiners should benefit. The challenge, however, is that this is history. The crude prices are going up, and from the way the geopolitics seems to be, playing out, it is somewhat surprising because, of course, the likelihood is that Venezuela, for example, will actually put in another 3 million barrels a day of production into the market. And there is already a surplus of a similar amount in the market. And yet we see that the oil prices are moving up. So clearly the market is factoring in something in terms of a demand shock or a supply shock where there is some reduction somewhere else which compensates for the potential increase in the supply. either which way, if the oil prices were to sustain and their upward rally as we see right now, you will have an issue with most of the companies which are into that business, especially the refining companies, because you will not be able to actually increase prices too much given where we are in the economic cycle. So net, you are looking at a situation where the explorers are the one, the crude oil producers are the ones who are likely to benefit, which is of the likes of ONGC and IOC. But there again, there is a cap because the government will quickly put in a supernormal profit tax on this, which is possibly one of the ways that they can bridge their fiscal targets. And therefore, I would expect that this will be a sector which will go to sleep if the oil prices were to move on.
Okay, look at the weakness in an HDFC Bank and an ICICI Bank. In fact, if nothing, ICICI Bank has weakened a little bit further. It's now down pretty much at the session lows, about 1.5% lower. And HDFC Bank, of course, has been a struggle, even though the stock has lifted a tad bit from the session lows, but still going into close week as we speak right now. Tata Elxsi, Infosys, TCS, these are the names which have seen maximum amount of selling. In fact, TCS is closing in with a solid 2.5% of a cut. Infosys is going down with a 3% loss, and Tata Elxsi as well, wherein you've seen a 5% crack come in. On the flip side, look at a Union Bank. We were just talking about MRPL. Union Bank has moved up about almost 9%. Vedanta, of course, has been a strong show. We just talked about, what Novama's stake was on Vedanta. MCX, Nalco, Bank of India, these are all the liquid movers in trade. But Anand, great to have you on the show. Thanks for your time as always. In fact, let's wind up for the day ahead of the trading holiday tomorrow. And let me hand it over to Snehi for